primary market is red hot, but IIFL's recent study reveals the trends and performance of IPOs that have come in the last 5 years. Hormaz is here with the key highlights. Hormaz, over to you.
Well, it may be Christmas season, right? It may be New Year's season, but for the last 5 years, come rain, sun or cold, the one thing that has remained constant is IPOs. And that's what IIFL's latest study is all about. Now, IIFL has analyzed 263 IPOs since FY20, where 101 of them saw private equity exits and the others saw exits from non-PE players. Now, here are some 5 key takeaways from this study. Now, first, it is observed that the IPOs of a private equity-backed companies generally come at a premium to the respective sectoral index, while those of the non-premium or non-PE companies come at a discount. Now, the numbers prove that. Now, the PE-backed IPOs have had an average premium of nearly 30% to their respective sectoral index, while a non-PE IPO comes at a discount of almost 13%. Now, it is this valuation gap that leads to the second takeaway, that the annualized outperformance of non-PE IPOs increases compared to those of PE-backed IPOs over a period of time. Now, the annualized outperformance from the IPO price of PE-backed firms is just 1.5%. Now, compare that to the 17.5% that you see for non-PE IPOs. But is this a post-listing phenomenon? Well, not really, because the gulf is evident from the listing gains itself. Now, this is the third takeaway, that the non-PE IPO outperformance is evident from the listing gains itself, because a PE-backed IPO sees an average listing gain of 15.5%. And compare that to a 23% gain that a non-PE IPO sees. But one thing is common between the two is that the post-listing performance or most of the gains come during listing, but the performance post that is subdued. Now, the annualized outperformance from the listing price is a negative 5% for PE-backed IPOs, while for non-PE IPOs it is in the positive, but still a subdued 3.5%. And lastly, the annualized performance from the listing price is more pronounced for non-PE IPOs compared to the PE ones, which also explains the takeaway we highlighted earlier. Now, the annualized performance from the listing price is a good 33% for non-PE IPOs, while for those in the private equity-backed space, it's just 21%. Now, so which are the sectors that have added the most in terms of new market cap? Now, well, fintech and financial services, especially considering the number and the size of the IPO that the sector has had, followed by industrials, consumer discretionary, IT, and pharma. So a lot of people would tell you that the price does not matter at the end of the day, but this study has a very clear takeaway that the price does matter after all.
All right, Hormaz, thanks a lot for joining in and filling us in with that interesting piece.